What about what Secretary Yellen said there about inflation? Johnny, where is the bond market broadly on how big of a risk that is and whether the downside risk to the economy, as she painted the picture, outweigh the potential negative risks of rising sustained inflation?
Well, I couldn't agree with Secretary Yellen more. And by the way, that was a fantastic interview yesterday, Sarah. Well done. I think she really hit the nail on the head. Central banks around the world have been overly fearful of inflation for as long as I can remember. I think the move last fall from the current Fed administration to go to average inflation targeting as opposed to a static 2% target is in some ways a tacit admission that monetary policy had been too tight coming out of the global financial crisis because of those inflationary fears. Those fears aren't there, and they shouldn't be there, I think, for good reason. So, yes, we will see a move higher, probably above 2% over the course of the next several months. Part of that will be the base effect from the low levels of inflation we saw entering the pandemic last year. But it's certainly not a concern, and I entirely agree that the stimulus package that's needed in the weaker sectors of the economy, it's a small price to pay if we see a further, call it 25 basis point move higher in yields across the Treasury curve. I think it's a very small price to pay when we have more than 3 million people fewer working today than we did pre-pandemic.
Johnny, clearly you guys had very strong volumes last year, as did many of your rivals. A new theme I know you're keen to talk about in terms of ESG bonds. Can that pick up the slack if overall otherwise volumes in macro terms or cyclical terms were dropping off?
Well, I don't think we're going to see the volumes repeated of 2020. I think there were unique conditions that led to the corporate financing bonanza last year that won't be repeated again. But there are signs that we're going to be running at a healthy clip this year. We're already running at a higher pace than we were in 2018 and in 2019. We're about to hit, I think, a record month of issuance for the month of February. And you're right, ESG financings are becoming a more important component of our fabric overall. In 2015, for example, there was $10 billion of ESG-related financings. In 2020, there was $75 billion in the US market of ESG-linked financings. We're already running at a pace year to date that's 4 times higher than we ran a year ago. Do I think it can pick up the full slack of where we were in 2020? No, I don't think so. But do I think it can be a much more meaningful part of our issuance fabric? Absolutely, 100%.
Shepard Smith here. Thanks for watching CNBC on YouTube.